Which is better, term life or whole life insurance? Hi, I'm Barry Page, President and Managing General Agent of Legacy Insurance Agency. And in this video, I want to help you determine which type of life insurance might be best for you. So which is better, term life or whole life insurance? Well, it depends. Every situation is different, and it really just depends on your goals and desires. You know, we've been told that we need life insurance, but my opinion is that you should want life insurance, and depending on what you want, then you can configure the policy to meet your goals and desires. You see, it depends on your goals and where you are in life. So depending on your age, depending on your income, depending on if you have a family, these are all things that factor into the decision. Now, I'm not here to debate what's better, term life or whole life, merely to explain to you the differences and why they might be important to you. Personally, I own both term and whole life. The reason being is I have as much life insurance as the companies will write on me. Now, I have term insurance that is convertible, meaning I can exchange it to permanent or whole life insurance later in the future. I don't have to requalify. I don't have to get examined again. If my health has changed, that won't matter. I can still convert it to permanent or whole life insurance later on down the road. So here's the major difference. If you want term insurance, understand that it is temporary. Whole life insurance, on the other hand, is permanent. So you don't have to requalify. You don't have to wait till you're later in life to find out that maybe you can't qualify for life insurance at that time. So it really just depends on if you want temporary coverage or permanent coverage. Now, we've been told that we won't need life insurance when we retire. And again, that's why I say life insurance is not a need product. It's something that you would want. Many people use life insurance for retirement income or to supplement retirement income. Many people use life insurance for business purposes. So these are reasons that someone might want permanent or whole life insurance. So a question that I feel is probably more important than the type of insurance is how much. And only you can determine that. And again, using those factors that we mentioned, your human life value, your economic value, this would be a better way to determine that. Only you know what you want to happen. And life insurance is a way to guarantee that what you want to happen will happen, whether or not you're around or not. So the death benefit of a life insurance policy would be payable to your beneficiaries or your heirs in your absence. So let's take a look at how a life insurance policy might be configured or constructed. Over here, this would be term insurance, and here would be whole life or permanent insurance. So let's take a look at the term first. Typically, term insurance is bought in bands. So that means that it increases in cost as you get older, okay? So if somebody in their 20s, the cost for term insurance is going to be very low, right? And as we get older in our 30s, the cost would increase. Into our 40s, it would increase more, in our 50s, and in our 60s. And once we get past 60, it's going to be probably cost prohibitive or may not even be available to get term insurance from many carriers. Now let's take a look at whole life insurance. Typically, again, somebody is probably going to start looking for insurance on themselves or their family when they're in their 20s. And a traditional whole life policy, the mortality is to age 100. That's how they were originally built. There's been a lot of variables. They've changed the tables recently, so they're going out to age 121. But we're just going to use 100 here as a nice round example. So somebody, wherever they are in life, if they're 20, if they're 30, if they're 40, that would mean that the premiums are due until age 100. Now, there are other types of products that are still considered whole life, and that would be limited pay products. So they might be payable to age 75, to age 65. That means they're paid up contractually at those ages. There's also 20 pays and 10 pays. Now, when you look at them in terms of cost, again, the term insurance is going to be the least expensive. There's a reason that whole life insurance, when you consider cost, might be more, but cost is relative because cost could be a good thing if you're looking at it to build value, cash value, and something you could utilize later on in life. So back to the whole life. A 10 pay means that the premiums are due for 10 years. You would pay the premiums for 10 years and then no more premiums are due. The policy would continue to grow. It really doesn't matter what age you are. You could buy it at age 20, age 30, age 40, age 50. On up to probably about age 70, you could do that. 20 pay, same thing. The premiums are due for 20 years. Then the policy is contractually paid up. The L65. Now, if you're over 50, you would have, until age 65 to pay those premiums. If you were age 30, again, the premiums are due to age 65. So really just depending on where you are in life and your goals would be the determining factor in that. The reason somebody might get a policy payable to age 100 is because the cost might be lower because the premiums are spread out over a longer period of time. But those types of policies also offer a lot of flexibility for riders and other enhancements to the policy. All right, so let's compare the two from a cost perspective once again and an ownership perspective. I always like to make the example since usually people that own or purchase life insurance may already own some real estate or a home or a house, okay? So I typically kind of compare the two, and that is that whole life insurance would be like owning your house. Term insurance would be like renting. The term policy is good for a death benefit to your beneficiaries or to your heirs. Whereas a whole life policy, you would actually own it. You could utilize the cash value. You could use the policy for many, many reasons. So I like to make those comparisons because it's typically just kind of easy to understand. You can either rent or you can own. Now, let's take it a step further and look at the costs that are involved with paying the premiums, okay? So with term insurance, you would rent. And so you can rent it for 1 year, 5 years, 10 years, 20 years, 30 years. Those are typically the terms available for term life insurance. Now, at the end of that term, the insurance will typically either go away or the premiums will increase dramatically. So most people will no longer keep the insurance after that because it's cost prohibitive. So if the premiums spike up dramatically at age 60 or 70, people just usually let the policy lapse or go away. On the other hand, whole life insurance, again, is for your entire life, your whole life. So if you live to be age 100, the policy might endow, or to age 121 nowadays with the new mortality tables. But this policy would be in force as long as the premiums are paid according to the schedule for as long as you are alive. Okay. Now there's many things that you can do with a policy. That's not what this video is about, but you could reduce it to paid up insurance. You could change how you pay. You could have dividends, maybe pay the premium. You could take loans. There's many things that you could do later in life once the policy's been in force a little while to change the frequency or how you pay the premiums if you wanted to discontinue or change that. But what I want to illustrate to you here is why some premiums on different types of policies might be different. So on the board here, I showed you a 10 pay, a 20 pay, a 65, a 75, and 100. So let's just assume for a moment that somebody started at 25 years old, okay? So at age 35, that policy, if they had a 10 pay, would be paid up. If they bought a 20 pay at age 45, it would be paid up. No more premiums are due. 65, the same thing. 75. But what I want you to understand is, so with the 65 policy, he would have ended up paying premiums for 40 years. and for a 75 for 50. And if you had a whole life 100 traditional policy, then in this example, 75 years. Okay? Now, again, I want to relate this to real estate, maybe a home. So most people are familiar with a 15-year mortgage and a 30-year mortgage. Now, assuming that you bought a, let's just say a $200,000 house, and the 30-year mortgage payment was $1,200 a month. Okay? So, and I'm just rounding, I'm not saying that's what the mortgage payment would be, I'm just using this as an example. Okay? A 15-year mortgage, you would have half the time to pay on that mortgage. So the cost of the payment would be more. And in this example, it would probably be somewhere around $1,800, okay? Now, again, these numbers aren't exact. I'm just using this for illustration purposes so you can understand that regardless of where you buy, it's the amount of time, the number of years that you would pay the premium that would also correlate to the amount of insurance that you have, okay? So, for example, let's just say this was a $500,000 death benefit, okay? Then a 10-pay policy, the premiums are going to be more than they would be with a 20-pay policy. And if it were to age 100, of course, they would be much less because you've got longer to pay the premium. So back to the mortgage, you've got longer to pay, so the amount of payment would be less. So it's the same with life insurance, that depending on how many years you pay the premiums. Okay, so let's recap. Term life insurance will protect your family or assets depending on why you're buying it, your goals. Permanent life insurance will do the same thing, but it adds some other benefits along with it, like savings, opportunities to use it for retirement income or supplemental income. Maybe you could even use it in business. There's many reasons that people want whole life insurance. So it's really just up to you what your goals are. The thing that I do recommend is that you choose the right type of company. Now, there's basically two types of companies out there. There's stock companies and there's mutual companies. Stock companies primarily are going to sell term life insurance. They do have some hybrids, index universal life, variable life, all of these things. We're not going to get into all of that today, but just understand there's term life insurance and there's whole life insurance or permanent insurance. Mutual companies, on the other hand, primarily are involved with permanent or whole life insurance. So if you get term life insurance from a mutual company, you can convert it to a whole life insurance policy later on without evidence of insurability most times. It all depends on the carrier and the type of product you have. So it might cost you a few dollars extra to get a term policy that's convertible with some of these carriers than not. So I also just want to mention I am an independent agent. I'm not basing this on any particular company. That really all depends on you and the agent that you choose to work with. But you'll have more choices if you work with an independent agent, and again, there's more variables as well. But the stock companies and the mutual companies are the primary thing that I want to emphasize here. A mutual company is mutually owned by policy holders. That means that the mutual company, if you have a whole life policy, would be eligible for dividends. Now, dividends aren't guaranteed, but most of the life insurance carriers have paid dividends for over 100 years. Another question that comes to mind is, what company is the best? A question I get asked often. Well, again, it depends. All of the companies are stable. Most of them have been around well over 100 years, and they're required by law to have reserves so they can pay any claims, death claims that may arise. So it really just depends on your choice and who your agent might recommend to suit your goals. All right, so I just want to wrap things up by just letting you know that term insurance is a good thing, whole life insurance is a good thing. They both are going to protect your family and your assets for whatever purposes you may have. So it boils down to what's important to you, and your agent should be able to help you determine which product works best for you. So I want to thank you for joining me today. I hope you enjoyed this video. If you did, just give me a thumbs up. Be sure to subscribe, and if I can answer any of your questions or your comments, just leave them in the comment section below, and I'll talk to you in the next video.